Hello, and welcome to another Daily Dose of Insights powered by Container xChange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Wednesday, so we typically look at some of key charts and price trends that move markets this week. But today, let's quickly start with another interesting development, namely the Suez Canal and the impending increase of Suez Canal transit fees, especially on the head haul trade from Asia to Europe. Why is this relevant? First of all, it increases another cost item on the carrier's P&L in a market where it's going to be very, very tough for them to push through any price increases or any surcharges towards the shipper or the freight forward. That means that even though carriers are barely breaking even, they will have to likely absorb this cost, which pushes their profit per TU or per vessel per voyage further into the red. Now, the second very, very interesting implication is concerning the USA. So why is this relevant? We've seen over the past couple of months that water levels in the Panama Canal or in the lake that supports the Panama Canal locks have been impacted by a severe drought, which forced the Panama Canal authorities to limit the number of daily transits that are possible through the Panama Canal. That in turn put a significant premium on sort of the East Coast voyage from Asia, which meant that more volume started to shift again towards the US West Coast, and more carriers actually started to service their Asia-America East Coast services through the Panama Canal. So instead of going trans-Pacific, they actually went around India through the Suez Canal, across the Atlantic, and then into the US. And now, with this increase in Suez Canal fees, this might tip again the balance, forcing carriers to move again more volume trans-Pacific, either into the West Coast or through the Panama Canal. So they're a little bit stuck between a rock and a hard place here. Now, let's very, very quickly also look at the market today. Let me just quickly share my screen here to give you a little bit more guidance of what I'm talking about. I'm sharing here our application. Actually, these are trading price trends in 4 key locations. It's a little bit busy here, so apologies for that. But I'm looking at 40-foot high cube cargo-worthy prices, resale prices, trading prices in Antwerp, Shanghai, Hamburg, and Moscow. Why Moscow? We talked a lot about Moscow and the China-Russia trade over the past couple of weeks, so I just wanted to keep that in for comparison. Now, what do we see? We see that since the beginning of October, so last month, prices started to pick up again, specifically in Antwerp and Hamburg, and then later also a little bit here in Shanghai. So actually, seems like used container prices have bottomed out. There's some light at the end of the horizon. It might be just a blip, like we saw here in end of July, beginning of August, which was then followed by a sideways motion and then a decrease again. But the trend here is quite positive, also week over week over week. On the other hand, Moscow doesn't see any of that. So prices still hover around the $550 to $600 mark, even in October. How does this impact leasing prices, you might ask? Well, glad you asked. These are our leasing price trends for 40-foot high cubes, again, from Shanghai to Antwerp, Moscow, and Hamburg. So here on the leasing side, we can't look at individual locations, but we always have to look at stretches, right? And these are one-way stretches ex-Shanghai. If prices in Shanghai increase, you typically see, of course, leasing premiums, leasing prices ex-Shanghai also increase, because for a trader or a leasing company, it becomes less profitable to move a container into another location from Shanghai if Shanghai prices increase. What have we seen in reality? Shanghai and Moscow has actually decreased. So this is very interesting. Prices in Shanghai increase, but still sort of the risk premium or the price premium for leasing moves ex-Shanghai to Moscow also decrease. So we'll have to look into what drives this trend. On the other side, Shanghai, Hamburg bottomed out sort of in September, end of August, beginning of September, and has been increasing ever since, similar to the moves from Shanghai to Europe. So here, we see a healthy uptick in leasing price trends. That's it from us for today. A little bit of food for thought and what might drive this. I haven't really also made up my mind myself. Might talk about this on Friday or next week. That's it from me from us for today. Let me quickly stop sharing. Thanks a lot for tuning in, and have a fantastic rest of the week. Take care.